hi, I'm Jo from Mooney & Co Estate Agents, and today answering all things in finance and how to buy houses and how to move is Margaret.
Margaret from Finance Path.
Alrighty, mortgage insurance.
Mortgage insurance.
So many people do not understand what it is and why they have to pay it.
Yeah, and what it's there for.
Yeah.
Yeah. So I've been around long enough to remember the times before mortgage insurance, which means that people didn't borrow more than 80% of the value of their house, right? They had their deposits and they didn't need to have mortgage insurance. So what mortgage insurance is, it's actually to protect the lender, not the client. It's not to protect you if you can't pay the mortgage. It's not that kind of insurance.
Yeah.
So if you borrow more than 80%, the bank sees you as a high risk and they want their loan to be insured. So,
but they're not going to pay for that to happen, are they?
Oh, no. You have to pay for the privilege of covering them. It's weird, isn't it?
And yet.
Yeah, and we have to do it because that's just the way it is. So, and the mortgage insurance is calculated at a different premium depending on the loan to value ratio. So the higher the percentage, the higher your risk, the higher the premium is. Okay? So let's say, for example, at 82%, you might pay a premium of 1.8%, right, is your mortgage premium.
So 1.8% of
the mortgage.
1.8% is the insurance premium.
Yeah.
So 1.8% of the total loan.
Yes.
Is the premium.
Yes.
Okay.
Yep. So at say 95%, you're a high risk, right? So your premium is probably going to be 3.5%.
Yeah. Okay.
Right.
Yep.
And also the loan amount. So that it's kind of like it's scaled. You know, if you were borrowing 600,000 or you're borrowing 300,000, 95%, not the same premium.
Yeah. Okay.
Right. Even though the LVR is the same, the loan amount. So the higher the loan amount, the higher the LVR, the higher the premium. So there's not this flat fee.
Yeah, it's like stamp duty. People say, "What's stamp duty?" I go, "There's no. It doesn't follow a straight stamp duty. It's not that straightforward.
No,
it's a little bit more complicated.
Yeah, no.
There's a few moving parts on it.
Yeah, it's not. And so people think that they're not. We're not paying for mortgage insurance because it's included in the loan. Well, you kind of are because, yes, it's added to the loan up to a maximum of 95%. So if you take that mortgage insurance out, you're actually contributing more of a deposit, right?
Yep.
It's a necessary evil. If you've got to borrow more than 80%, you've got to pay mortgage insurance.
Yep.
But obviously, if you're a first home buyer, there's some schemes around that can help you avoid the mortgage insurance. Or if you're lucky enough to have parents that can go guarantor for you.
Yep, to bring that ratio down.
So we use a family guarantee.
Yep.
Then there's no mortgage insurance.
Yep. And I know like over time, a lot of people, and this is going back, I reckon, about 4 years ago, and there was first home buyers and one husband and wife, young couple, and the husband was dead set. We are going to save 20%. We are not paying mortgage insurance. That's just how it's going to be.
How long do they have to save for?
They finally conceded because we had the conversations around how much can you save in X amount of time versus how the market was going at that time.
Yeah.
And I'm like, if you wait for 20%, you will have recouped that and more in equity growth.
Yeah. And you're always, the goalposts are always moving, right? The house is always going up.
Houses were going up.
So your 20% has to get bigger and bigger and bigger. It's just...
I said to him, you're like on a hamster wheel. I fully admire the financial sense and logic behind it, but the reality was in the market conditions we had at that point, it was not going to play out.
No.
And the wife was like, thank God you've had that conversation. She goes, because I just couldn't get it through to him that we just couldn't save out of range. She goes,
Yeah.
well, I've missed out on some damn good houses that I would have been
And,
very happy
and then
with.
factor in how much rent they've had to pay
Yeah.
in that period of time.
Exactly, yeah.
Exactly.
So,
yeah.
You know, at some point with real estate, it's get in.
Yeah.
Get in the best way you can at that
Yeah.
beginning. If it means paying your mortgage insurance to protect the bank because they think you're a higher risk, take it. It's a cost of doing business, so to speak.
Yeah.
And if you look at the value of a house is always going to go up over the longer hold, essentially you can sort of look at it as a bit of a business.
Yeah.
And say, well, that's a cost of doing business.
Yeah.
That's what I've had to pay to get this much tax-free money on my home,
Yeah.
which is
Yeah.
pretty good.
Exactly.
Cool.